Hi everyone, hope you had a great Easter and just going to take you through my macro outlook. Okay, so as usual, just going to take a really quick look back at what happened last week. So last month, we saw yet more record highs on indices and gold. That's due partly to the Easter break when there was less traders in the market. The thinner markets, it's easier for the bulls to sort of be bit pushy and move the prices higher, less resistance. PCE was released on Friday. That was pretty much as expected. And of course, that does keep alive the chance of a Fed rate cut in June. Now, this week we've got jobs data, and that could be sort of almost the final decision maker, because Powell seems fairly concerned that, the jobs levels, the job offers are declining, and that the jobless rate is starting to increase and looking ready to break that 4% soon. As usual, I'll be looking closely at the JOLTS coming out, ADP and NFP. Uh, for me, I'm really focused on the hours worked and the hourly wages and such like, because, they're the inflationary elements. Now, apart from stocks, we're seeing new highs on gold. Even oil's had a very sort of steady undertone recently, and that's obviously due to geopolitical tensions, plus lower crude stock levels and increased demand. Now, Russia claimed it was going to start to sort of adhere to its quota levels. This month we'll have to wait and see. And then, of course, Russia also moved some more ships into the Red Sea. Houthi continue their attacks on shipping. Now, while we stick with commodities, cocoa is still reaching new highs. It hit $10,000 per ton recently, which is, cocoa was the first contract I ever traded. It was one I was trained on, and I remember the first time it broke £300 a ton. So yeah, that was way back in the 70s though. Okay, so in last week's post, I sort of mentioned the year-on-year changes for a few of the assets. This week, I'm going to highlight them on month-on-month changes. So just remember, month-on-month these are. So equities are up 4.5%, gold up not around 9%, cocoa up 63%. Remember, these are month-on-month. Crude up 6%. The agricultural products are fairly mixed, sort of plus or minus 6%, depending which ones. And nat gas is down almost 7%. That just gives you a little bit of an idea of some of the changes, and that's just over 1 month. Now, in Japan, retail sales came in better than expected, although that said, industrial production was disappointing. And when we look at the EU, we think of it as a single market, but obviously it's made up of all those countries. And there's quite a contrast between those economies. It's possible, based on recent data, that France could hit that 2% magical inflation target that central banks love this year. That's just France. And, indeed, we've had another mild winter in Europe. I'm based in the UK. And, all that impact from Russia invading Ukraine seems to have almost disappeared now, as in the way of impact of the markets, of course, not for the fact of all the violence that's going on. And I suppose, any recessions that we see, I doubt whether they're, at the moment, they're looking as though they're going to be any more than technical ones. So the question next is going to be, will the ECB or the Bank of England beat the Fed in cutting rates first? I know the Swiss have already done it, but I'm just thinking of these three that I focus on. Okay, and don't forget, Europe changed to summertime this weekend, so they changed their clocks. Now, I know I mentioned India quite a few times, and the Indian economy remains strong. It's attracting a lot more international investment, and some of that's even coming from the US now. Okay, so moving on to this week. This week we've got Eurozone inflation and employment data, plus of course that eagerly awaited US employment data. There's also Chinese PMI releases and RBI rate decision. Now, as we're starting Q2, we're going to get firms' earnings reports flowing soon for Q1. Now, will this cause a correction to stocks, or will it add fuel to the fire and have the bulls taking them even further? Now, this Friday, the 5th of April, I'm presenting a webinar on trading futures and options. It's hosted by my friends at Tickmill. You can check my LinkedIn or their website for the details, which we'll be posting quite regularly this week. It starts at 6 p.m. So because it's a bit later in the day, I'll also be looking back at NFP and how it's likely to impact the timing of the Fed's rate cuts. Surely they have to start soon for it to be of any benefit to Biden against Trump in obviously this November's rerun of their last election. So that sort of pretty much ties up my macro outlook for the moment. Hope to see you Friday. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that inner trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.